what happens? In the commercial real estate market, from what we're hearing, is basically frozen. We're beginning to see more strategic defaults and fire sale prices anecdotally. So that's one area that we know is having problems. Why? Well, if you look at the loans to the commercial real estate market, somewhere between 60 and 75% of measuring emanated from the regional banking system. So that's a problem because deposits are still in outflow mode. So that could be a slow motion, I don't know if we should call it train wreck, but it's not a good situation for commercial real estate. But there is a hard landing possibility here as well. And for those of you who listened to the podcast with Art Laffer, forgive me, I'm going to go through this again, but there's a very simple identity in economics. Most people who take macroeconomics 101 learn it in that class. And it is that MV equals PQ. So PQ is price times quantity, and that's nominal GDP of the economy, so the production of goods and services in the economy. The other side of that, and these two have to equal, is MV. Well, we know that money supply on a year-over-year basis is going down about 3% year-over-year, estimate for March. And on a sequential basis, it's going down even more rapidly. So to plug that hole and to figure out what's going to go on here, if you look at what happened in the first quarter, it looks like nominal GDP was up roughly 7% on a year-over-year basis. You've got money down 3, so that means velocity was up roughly 10 on a year-over-year basis. Now, velocity, if you look at it over history, you'll see that it peaked secularly in 1997 and has been falling from a trend point of view ever since then. Now, what happened during a recession or a crisis is velocity falls dramatically. It collapsed during COVID, for example, and during 08-09. And after the shock of those experiences, it tends to rebound back to trend before resuming its decline. Well, it started rebounding. It has not gotten back to that downtrend line. And what worries us and focuses us on the possibility of a hard landing is the banking crisis. Typically during a crisis, velocity falls, as I mentioned before. The banking crisis happened in mid-March. And so if velocity is even flattening out, we have a problem, and we could be looking at a hard landing. Now, you'll notice that the stock market is still up year to date. If money continues down and velocity even flattens out, then on a year-over-year basis, it's going to be slowing dramatically from 10% in the first quarter to 5 to 7% in the second quarter. And if money is down 4%, well, that doesn't leave much room for nominal GDP growth. So that's in response to the crisis. That only leaves 3% for nominal GDP growth. And that's much lower on a year-over-year basis than what people are expecting for the second quarter that we're in. Now, maybe it'll take a little bit of time to play out, but we do think that 2 to 3% nominal GDP growth or less at some point this year on a year-over-year basis is going to happen. And so something's going to give. What is it? What's going to give? It could be consumption if the unemployment rate starts moving up, and there are some indications that we're going to have some significant surprises in terms of the unemployment rate going up.